Welcome back, Reluctant Preppers. With us today is Bill Murphy. He's a financial commentator and co-founder of the Gold Antitrust Action Committee, GATA.org, which is organized in 1998 to expose and oppose and litigate against collusion to control the price and supply of gold and financial-related instruments. GATA have used the U.S. Freedom of Information Act to investigate and to sue the Federal Reserve in U.S. District Court. GATA elicited an admission from the Fed that it has gold swap arrangements with foreign banks and insists on keeping them secret. And the court proceedings showed that G10 member Treasury and central bank officials secretly discussed the coordination of their policies towards the gold market. The court ordered the Fed to pay court costs to GATA. GATA has since then collected and published dozens of documents showing Western Treasury and central bank efforts to intervene both openly and surreptitiously against a free market in gold. GATA has held 4 international conferences. Their co-founder, Bill Murphy, is here today, a widely recognized expert on gold and silver markets, the forces that impact them. We have him here today because reluctant preppers are doing what they can to protect their families from unnecessary financial and physical risk. And one of the forces that we cannot control is those that affect our currency. Bill's here today to talk to us even about forces that are impacting the value that is being assigned to precious metals, gold and silver, real money. Welcome today to Reluctant Preppers, Bill.
Glad to be here, Donegan. Thank you.
I was hoping you could help us address the topic of what your family needs to know about gold and silver. It's a broad topic, and a lot of our viewers may be at different stages of understanding and learning about precious metals. For some, it's a brand new topic. So if we could start at the very beginning, and if you could walk us through why are precious metals different from savings accounts?
Well, the whole thing is, as you might surmise, Donegan, this is what a huge subject to try to get into. All I can say is that, gold and silver are different than other things because, they have no counterparty risk. They have no other liabilities attached to them when you have physical gold and physical silver. And simplistically put, even today with many of your listeners may know about, quantitative easing and the government printing all kinds of money to try to keep our system afloat. And it devalues, eventually is going to devalue the dollar, quite a bit in what people actually have. It's just the same thing, supply and demand. They're just increasing the supply. Well, there's only so much gold, and it's valued at such a, at a certain price at different times, and it's something that, it's going to maintain its value during these sort of devaluations and money printing. So for people to own some gold or silver as protection against other assets falling apart, many other advisors think is a good thing. And of course, I'm very prejudiced that I think owning a lot more of it is going to be the way to go in the years ahead. So, I obviously own a lot myself, and I believe it's a good thing to own. It's been pretty crummy the past few years, but we can get into that for the reasons why and why that's going to change dramatically in the years ahead.
I know we met in person at the first Liberty Mastermind Symposium in Dallas, Texas last year, and at that time you asked a question of the speakers is how did we get it so wrong? People were looking for a real continued bull market that had been happening for several years in precious metals. You were questioning with some dismay that a lot of people who have been investing in precious metals have observed the price going down, but is that not also to be looked at, especially when you understand the underlying fundamentals and how those may remain unchanged? Isn't the current price action an opportunity for people to increase their holdings at a lower cost to their family?
Absolutely. Well, gold was stuck thanks to the central banks, and what God has uncovered is the billion banks and the central banks, the U.S. government, have been manipulating the price for years. They fixed the price way back in the 60s, and it was common knowledge that they were fixing it back then. Now they do it very secretly. But anyway, the price of gold was held around below $300 or at that level in 1999, 2000. In 2000, when it started to rise, it went up 12 years in a row, eventually reaching $1,900 an ounce in 2011, just about 3 years ago. And then they made the concerted effort. They said, we're going to take this back down, and we've got to get it back off the radar screen. So the price has gone from $1,900, 3 years later, is now $1,250. Silver was as high as 3.5 years ago, $50 an ounce, and now it's at $19. So you've had major corrections here, and there's reasons for it and what they've done and why. despite all this quantitative easing and all this sort of stuff with money printing. And it's leading into tremendous opportunities. If gold were to have kept pace with inflation, it would be double what it is today at least. And, of course, if you take in the money printing, it should be a lot more. Silver's been to $50 twice in its history, the first in 1980 and then 3.5 years ago, and the odds of it now going to 100 once it takes out 50 the next time are extremely high. So this is a great time for people to take a look at gold and silver. And, of course, the human nature, it being what it is when people tend to shy away. But once people take a look at it and can look at it at least as insurance, this is a great time to be getting on the case.
Now, earlier you mentioned the counterparty risk reduction by owning real money. What are some of the examples of counterparty risk that families are subject to that they may not even realize that if they think they're trying to take a pretty prudent, conservative, responsible position with their family's finances?
Well, you can always have certain kind of defaults, for example. I mean, they have these bail-ins in certain countries, and where the government can just come in and just take away, if you have money in even in your bank over a certain amount, they can come in and take away a certain amount of the equity out of nowhere. There's many other investments where you, if you own a stock, the ownership of the stock, you can have, all of a sudden things can change there. There's just different risks that you have dealing with other parties, individuals, brokerage firms. I mean, look what happened was a brokerage firm that 3 or 4 years ago folded. In the futures arena, all the people who had their money invested in it, they lost their money. At least it was taken away for years. So it's not always as simple as it looks in terms of what you see.
Yeah, we were one of the casualties of the Lehman Brothers collapse. And in addition, you even mentioned how the Fed has been diluting the U.S. dollar, and that's impact on the real value of their savings.
Yeah, I mean, look what interest rates are. I mean, today, I mean, they're in many cases, they're just right above zero. So it's really hurt savers. They've manipulated the bonds and the interest rate markets to bring them down to levels that are historically as low as they've ever been. And in the meantime, they're printing all this money, and that's what's known as quantitative easing, to putting money into the system, trying to keep the economy going, and they're doing it for certain reasons. And, of course, that's one of the reasons, if I may, that the gold price was taken down by they bombed the market. They took central bank gold and hit the market to get the price down to deflect what they were really doing when it comes to printing this money. It's why other assets today are relatively high. Real estate's come back, stock market at all-time highs, and for what they've done, and yet to deflect from that what it's going to mean down the road, or what it means now, actually, too, in terms of interest rates, they've gone after the gold price, because gold's a barometer of U.S. economic health and well-being and so on.
In the sense that...
So when they take it down, it's like, well, everything's so good. If the gold price is screaming above 2,000 now, it would be like a warning signal to the public and to investors, and they want to diffuse that thermometer.
Let's walk through that again in slow motion, because I think you covered very, very efficiently there what I think may be some major concepts for people to get their heads around. That as inflation is driven through diluting the money supply through money printing at the Fed, which is going on at the tune of arguably $25 billion a month now. It used to be $85 billion a month during the peak of the QE, but there's lots of arguments about how much is actually being revealed about that. But due to that and other forces, actions taken by the Fed to dilute the money supply, the value of the U.S. dollar drops, and if it's the measuring stick by which you're measuring all the other values of everything, including the consumer goods you buy, your investments in stocks and bonds, your value of your home and everything, if your yardstick is shrinking, everything else should appear to measure bigger and bigger. The stock market should appear to go up and up, and the value of your home should appear to go up and up. People don't seem to mind that so much. That seems to give them that flush feeling of good times and a wealth effect when they see their 401k value looking like it's going up and up and their house going up and up in value. But you're saying that by rights, if I'm hearing you correctly, the value of gold and silver should also be going up in those times because...
Absolutely. I mean, it makes common sense. I mean, when the last quantitative easing started, gold was at 1,700 something. 1798, I think, and now it's it said it's 1250. Why would gold and silver should have collapsed with something like this? Now, The other thing that's ironic, it's the dollar has recently been going up, although the euro is about the same price it was when this quantitative easing started. But it's because the other currencies, the yen and the euro, are so lousy that the dollar has been strong. But again, think of gold as a thermometer or barometer of the well-being. So when you take it down, I mean, think of it. Every time the gold price is screaming, what do they talk about? Too much inflation, bad for the dollar, some crisis. It's bad for Wall Street, bad for the politicians. It's hated. So as you just said, when you get the price down here, with the other assets going well, it looks like everything's very copacetic and just fine. But behind the scenes, from our camp, the way we think about it, there's some really big issues that are being camouflaged right now.
And one more, before we get onto that topic, what I'd like you to bring us into, just to recap one thing you just said, is about politicians and bankers, people that have power positions in the existing money system, don't like it when gold and silver and precious metals appear gaining in value, because that shows lack of confidence in the fiat money system. And it's ironic because so often we hear about the value of the U.S. dollar is not backed by anything other than the full faith and confidence of the United States. So it's the shaking of that confidence is what I'm hearing is a bad news for politicians and others in power. If the people lose confidence in the currency, what kind of, I imagine there's the risk of job security for those politicians that are in power if people become dissatisfied. But what other effects are they concerned about that could ensue?
Well, I mean, it's just that the markets could go the other way. And so, as you said it perfectly, I mean, it's a confidence barometer. And so they want everything to look that everything is just fine. And one of the ways to do that is to keep the gold price down. That it's like a vote of confidence in what they're doing to aid the system. And there's some real concerns now about what's really going on, that the stock market's just being pumped up because of all this money's got to go someplace. And so and even the real estate market, that things collapse sometimes out of nowhere when things are artificially created. My personal opinion is that the artificially driven gold and silver down to too low levels, and why other asset prices are too elevated. And out of nowhere, things can blow up. There's something that they call derivatives that are just gone bonkers. They're paper instruments used by the big banks and by the big financial interests to do what they want with markets. And I know J.P. Morgan has a $2 trillion a day operation in Florida. It's a secret operation, and that's not from me. That's from Jamie Dimon, their CEO. And these things have got things going so that everything's sort of jiggered, that everything is fine feeling, like the old movie, The Stepford Wives. They can go around and wives say everything is fine, and that's what they want to create here, to build confidence, to get the consumer to spend, to try to right the economy. But fortunately, we think they've gone too far and create a situation that eventually could be unstable, where all of a sudden, gold and silver are going bonkers because they can't control it anymore. It blows up, and stock markets and the real estate markets get hit very badly.
Now, what are some specific examples you can bring that might be the most classic or recurring or classic examples you can explain to our viewers of ways that you see the price of gold or silver being manipulated down on a recurring basis?
Well, there's so many of them. I mean, this is one of my favorite ones recently, is that they have what they call an access market opening. And there's a COMEX where they trade commodities silver during the day, and then it goes and shuts down in what they call access market trading. And then it reopens like at 6 o'clock New York time. It has reopened lower 91 out of 95 of the last times. That is almost a statistic impossibility that a market could do something like this. And that's when gold and silver has dropped from 21.50 now to below 19. And it's like an indicator of what they're doing. I mean, it just shows you how rigged the market is. I mean, I can't tell you how astounding that is. And going back 3 years of the silver bear market, it's opened up lower 83% of the time. So they stepped that up. It's just a little nuance, something that we noticed that no one talks about. I mean, how can people who follow the silver anyway, not talk about something like that? It's a perfect example of how rigged it is, and what a signal they're giving to what they're trying to do to get the prices of gold and silver down. I mean, there's so many things. I mean, when the silver goes up, it's limited so often to 1%. No follow-throughs allowed. When you get bullish news, the market gets hurt. Everything is negative, and you can just see how the market's traded. We've watched it for years. The players that we hear are on the short side. Where they come in and how they do it. I mean, 2013 when the price was about 1,600, 400 tons hit the market. The price dropped to $203 in days. There was no reason in terms of the news to account for something like that. There's no rule of law. The CFTC does nothing. The big banks and do whatever they want to do, and the CFTC lets them get away with it.
So this is a regulatory agency. This is the what does CFTC stand for?
Yes, the Commodity Futures Trading Commission is the one who's supposed to monitor the legal operations.
It's a branch of the federal government?
Yes, it's an agency of the federal government. But, how can people not understand how manipulated this is when every other market has been revealed over the past years to be manipulated? This big interest rate in Europe called the LIBOR market, and that was a big manipulation scandal. There's a scandal that's evolved about in the currency markets. It's been one thing after another. Everyone knows that the bond market, they even admit the bond market's manipulated. They force the rates down, and that's what that's all about. So to think that gold is the only market in the world that's not manipulated, stock market, you've got the plunge protection team and central banks like Japan coming in. Our central bank, I know there's a document just released where they get a discount if they trade on the CME, which is one of the commodity exchanges. It's so pervasive, it's probably the most important aspect of the market. And what that means is why it's important to your listeners, because they maybe don't want to get into all that stuff, is that gold and silver have been sent down to artificially low prices. The central banks have been getting rid of their own gold to suppress the price. Somehow they found enough silver, but it's going to lead to price explosions.
And how does that play out? First of all, can you talk about where they got all that gold and silver in the first place in central banks? If one of those is a central bank of the United States, doesn't that really belong to the U.S. taxpayers?
Supposed to, 8,135, about 33.5 tons. But as Gata says, the United States would rather reveal our nuclear secrets than what they're doing in the gold market. And that's why we sued them. Got one check from them. But what is there not to talk about? No one, they won't answer any questions. In other words, what is there to keep secret about when they say that the gold's just sitting there, that they're not doing anything with it? Then how can they withhold 12 documents from us? And there hasn't been an audit of the Fed, independent audit, in 50, 60 years. I mean, it's all secretive. We don't think it's there. We don't think we have our 8,000 tons. We have maybe half, a third, who knows? And, of course, if that got out, the dollar would collapse.
So the idea you're describing is that in order to prevent loss of confidence in fiat currencies like the U.S. dollar and all the other currencies of the world and the system that's built around them that's manipulated for the benefit of the few, central banks and others have actively worked to suppress the price of gold and silver, which would otherwise be correctly interpreted by people as alarm warning signs of instability in the other markets. And the way that they've done that, for one, is by selling off their actual own holdings of gold and silver, including that which should be rightly belong to the taxpayers, of the people. And then you mentioned earlier derivatives. So there's, even after you're run out of physical gold and silver that the banks can sell, they have ways of driving down the market further, even though they don't have any physical.
Yeah, and you said this very well. Central banks are supposed to have 28,000 tons of gold. They probably don't have 10,000 tons left, maybe 8,000 tons. So they've secretly taken their gold in sub-central banks and given it to bullion banks, either in lending operations or whatever, and these bullion banks have then sold the gold and taken the money from the gold and used it for different things. And, of course, when they put that gold into the market, it suppresses the price. It puts physical gold into the market. And how they affect this trading is they go in what they call the COMEX, the futures exchange, and in the derivatives market, the paper market, and bomb that. And all they have to do is, and there's no law, no rule of law, because the CFTC, as we mentioned earlier, does nothing. There's no limits, and collusion stuff doesn't apply to these people because there's, again, no rule of law. They can just bomb the market in the futures market, and that affects the physical market.